what you want to do is embrace technologies or ideologies that reinforce individual sovereignty and freedom, and they're rational. So hence Bitcoin, right? Like, if you're gonna if you have a bunch of money.
Hello everyone and welcome to the Daily Crypto. We are back with another interview, and this time we have Michael Saylor with us. But before we get started, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 20, same as yesterday. Currently Bitcoin and Ethereum are trading for 19,159 and 1,313 respectively. With that out of the way, let's jump right into the video.
The idea was, if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down, the bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to zero. So after we had lowered interest rates from 5%, 5.5% to 5 to 4.5 to 4 to 3.5 to 3 to 2.5 to 2 to 0, and left it at zero, then the debate was, can they take interest rates negative? If you can't take interest rates negative, then bonds don't act as a hedge to stocks anymore. I mean, you're at the end of the road for bonds. And what we saw with stocks is the Federal Reserve printed a bunch of money, pegged interest rates at zero, and then you saw all these risk assets explode. You saw the NASDAQ explode up and the S&P explode up. You had a K-shaped recovery. And in the K-shaped recovery, it's almost like the entire economy was in a train wreck or in a car wreck, and we got taken into the hospital and they pumped us full of morphine.
Over the last year, we have seen almost all financial markets get destroyed and set new lows. The same is also true for US Treasury bond market, which the investors were expecting to get a steady yield out of until the Fed stepped in and increased rates exorbitantly. Even though they're still generating 3 to 4% yield, it is nowhere near the inflation and interest rates, which is why they're not a good investment during these times.
So I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022. And now, instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history. And now we're jacking up the cost of money faster than any time in history. And the result is that all the traditional models are broken.
Before the Fed printed trillions of dollars to stimulate the economy during COVID, Jerome Powell famous said that he is not even considering increasing interest rates until 2024. Of course, he was just messing around because it's 2022 and he has already hiked rates by 2.25% in a very short period of time. This is alarming because it reflects on how bad the situation is getting.
So we have an unprecedented amount of encroachment. We have politicians overriding the free market. They tell you what kind of energy you can use. They tell you, how far you have to sit from someone. They tell you whether it's safe to be sitting in your office at a table next to someone. Lots and lots of encroachment. Each of these areas, right? War is the suppression of the free market to the benefit of the public or the public organization, right? The government is suppressing the free market. So if the government keeps suppressing the free market everywhere, what you do is you cripple production, right? Yeah, that's what we have tariffs on Chinese imports, right? That the drive up prices up or down, drives them up, right? You have a war or a labor war, right? If everybody unionizes and if everybody's afraid to go to work, and if everybody thinks that their life is threatened to stand next to another human being, right? And if we're afraid to trade with each other, and if we're afraid to talk with each other, right? If you have capital controls, wage controls, price controls, export controls, manufacturing controls, right? As those things happen, they have a chilling effect on the economy.
Michael believes politicians are responsible for destroying the free markets by introducing certain measures and policies that restrict how people can live their daily lives. This in turn causes a shortage, which leads to higher inflation.
What you want to do is embrace technologies or ideologies that reinforce individual sovereignty and freedom, and they're rational. So hence Bitcoin, right? Like if you have a bunch of money and you have a choice, are you going to buy $1 million of gold and put it in a bank of a centralized institution that will seize it? Are you going to buy $1 million of land in the middle of Beijing where the government of China could just take it from you? Are you going to buy $1 million worth of a stock in a Chinese company? How about an American company? How about an Argentinian company? Or are you going to buy $1 million worth of a crypto asset that's in cyberspace beyond the reach of a government or a corporation? And so clearly, the answer is, if you take all of your money and all of your power and you put it in the middle of Beijing, right? They own you. And if your life is not consistent with the policies of that government, then you lose everything. If you took all your money and you invested it in New York City, the mayor of New York could just take it.
Investors need to realize that the most important aspect of an asset is the actual ownership. Since governments have the power to basically decide what you keep and what you don't, Michael believes Bitcoin is the future since it gives 100% ownership to the owner and no one can seize it.
Complying with the norms of society and conventional wisdom that you grew up with. People say things and they repeat these bromides, and they give you a simple rule of thumb, like, oh, the rule of thumb is 60-40 stock bond portfolio. Or the rule of thumb is stay diversified, or the rule of thumb is, buy the biggest house you can and get the biggest mortgage and you'll be fine. Okay. Well, those are all fine, assuming that you have equilibrium and you don't have a radical state change. For example, that all those rules of thumb they don't work if you're a Jew in Nazi Germany in the 30s, right? Buying a house to store value doesn't work, right? Trusting the government. How about trust the government, keep your nose clean? That doesn't work, right? Buying stocks, that's an interesting thing in the US when the money supply expands at 7% a year. Do you think stocks work if you bought stocks in Zimbabwe or stocks in Cuba or stocks in North Korea or stocks in Argentina or stocks, fill in the blank? They don't work. What happens when the government crashes? You think stocks work in Sri Lanka?
Michael says the traditional methods of investing in a 60-40 bond portfolios or real estate are broken and not efficient in today's financial conditions. With everything getting more and more expensive, investors need a hedge against all this chaos that will protect them during times of financial distress and retain its value.
Right? No. How does stocks work in Russia in the 90s? Well, the entire currency collapsed, the government collapsed, everybody lost everything. Everything. So, diversification. Diversification doesn't work when every single thing you own in your portfolio is correlated. For example, you can buy any company you want in Germany in 1944. how's your diversification going to work, right? How about buy anything you want in the city I'm about to drop a nuclear bomb on? How's that going to work, right? So diversification is a bromide. Stocks, bonds are a bromide. Real estate as monetizable property, it's a bromide. It only works if you can trust them. How's it going to work when I actually get elected mayor and I just seize your entire property to make into a pet hospital for the good of the people? Or how about this one? At what property tax rate? If property tax are 20 basis points a year, maybe property is money. What happens when they're 200 basis points a year? Property tax rate in Florida is 2% a year.
Imagine saying your stock portfolio is well diversified and stable while living in Sri Lanka, amidst a currency crisis. It just won't work out. No matter which company you're invested in, it will be affected adversely because of the government collapsing. This is why Michael is a Bitcoin maxi, as Bitcoin is free from any governmental bodies and regulators. Thank you for watching this video. Please take a moment to drop a like and subscribe to our channel so you never miss another upload. See you guys in the next video.